On today's video, I want to give you guys an update regarding home prices, housing inventory, new listings, and much more, because there are a lot of changes and disparity between the Raleigh housing market and the national market. Hey, this is Will Wofford, real estate broker with Berkshire Hathaway in Raleigh, North Carolina. And today, I want to make sure you guys are informed of the latest trends on the housing market. So today we'll compare and contrast our trends against the national averages to see how the Raleigh housing market compares to the U.S. market as a whole. Redfin just reported that their home buyer index posted their largest year-over-year declines in over 2 years. The weekly share of listings with a price reduction has reached an all-time high. In other words, the number of sellers that are reducing their asking prices has reached an all-time high for the 4 weeks ending June 19th. Further, their chief economist said, quote, mortgage rates near 6% have put a big chill on the demand for homes. While we're talking about rates, let me show you the current rates from the Mortgage News Daily. The average 30-year fixed is 5.9%, 15-year fixed 5.25%, 30-year VA is 5.55%, and the 30-year FHA is 5.32%. So let's dig into this a little bit, because ever since the end of May, mortgage rates were declining, but more recently they've started to increase. So mortgage rates reached highs we haven't seen since 2008 on the 14th of June, when the average 30-year was at 6.28%. But then rates declined through the 23rd of June, when they dropped to 5.75%. But now they're starting to increase again. And Redfin noted that fewer people searched online for homes on Google, and touring activity as of June 19th was 6% below the start of the year, compared to a 24% increase at this time last year. So agents are showing fewer homes, home tours are down. So that's a quick look at some of the leading indicators in the housing market right now. And I wanted to give you a little bit of an overview. So let's dive into the home prices and housing inventory, and we'll start to compare the Raleigh market to the national. Here are the key market takeaways for the 400 plus U.S. metro areas. The Redfin index that I'm using tracks across the United States. And Redfin reports this data on a weekly basis. So this data is as of June 19th. The median sale price across the United States was up 14% on a year-over-year basis to a record $400,000. And the median asking price or listing price of new listed homes increased 16% year over year to $406,000. And I've got a couple of graphs I want to show you regarding the median sold prices and also the median ask price. And I want to preface this by telling you those stats are for houses that have actually sold. And those sales occurred a couple of months ago when the home seller accepted an offer from the home buyer. And remember, rates were much lower than today's rates, so don't read too much into these numbers. But the median sale price in the U.S., as represented by the red line in 2022, hit a record $400,000. And if you look at the blue line, that's 2021, prices in 2021, $350,000. So we're up about $50,000 from 2021 levels. And the gray line is 2020, and we're up from $275,000 at this time in 2020. So sales prices in the U.S. are up considerably in the housing market. And in Raleigh, North Carolina, the median sales price is currently $444,000. So about 10% higher than the national average. All right, and going back to the national averages, the median list price is up 16% year over year to $406,000 for the U.S. market. And Raleigh, in comparison, the median list price is $466,000, which is a 26.6% year over year increase. And remember, this is the price the seller's listing at, and the sales price is the price he actually got. So the list price right now is considerably higher than the selling price, both the U.S. and the Raleigh market. So one thing I want to bring to your attention regarding home prices is that we're approaching the summer months, so it would be pretty normal for our home prices to decline a little bit or top out here for the last half of the year, because kids are out of school and people are on vacation, and they seem to put their home buying or selling plans on hold. So I wouldn't be too surprised if this median sold price has actually reached a high for the year or drops a little bit over the rest of the year. And that's just the seasonality in our housing market, despite the fact that our housing market right now is absolutely insane, right? I mean, mortgage rates have basically doubled this year, and we have this affordability crisis, and we're seeing a lot of factors right now that indicate home buying demand is decreasing. So we'll just have to see what home prices are going to be doing the rest of the year, because perhaps we may be seeing some changes in the months to come. But I think it all really depends on the housing inventory of our supply of homes for sale. But I do want to point out, we are starting to see a dip in the median asking price. I mean, of course, we're currently at 406,000 on the national level, which is well above the 350,000 of 2021 and way, way, way above the 275,000 in 2021. But you can see the red line is dipping, and it's dipping much more than the blue line in 2021. Of course, rates have gone up a lot, but I do want to point that out. The median ask price, while it is up 16%, is starting to trend down. And if we look at the Raleigh market, it's the same story. Not as much of a trend down, but it is turning down. And I want to mention, in the last half of 2021, we had an unusually high demand because mortgage rates decreased to 2.75% in August, which was very close to the all-time record low for mortgage rates. And that, of course, caused the buying frenzy in the last half of the year, which drove home prices up. So if we have a more normal market, we should expect home prices to decrease or top. But if they fall a lot, significantly, that of course wouldn't really be normal. And what we're also seeing right now, because of rising mortgage rates and of course rising home prices, is rising mortgage payments for would-be home buyers. So right now the median mortgage payment on the average list price home in America, and this is kind of a forward-looking contract on a new home, is $2,500 per month. That's at a 5.81% rate. And you compare that to 2021, which is the blue line, when we were below 1,700, say 1,650. It's about an $800 increase per month, 48% increase. And this is the real catalyst that is sucking the life out of the housing market right now. And by that, I mean the pool of buyers that are looking to buy the average house in the United States who can afford to pay roughly $800 more per month to essentially buy that same house as compared to a year ago is shrinking. And that's why I think you're starting to see rates flatten off, because these rate increases are completely abnormal and not sustainable in the long run. Now, I'm not saying rates can't go up, but I am saying I'd be surprised if mortgage rates continue to go straight up, because the Fed's going to choke both the housing market and the stock market at the same time. And I've generally come to realize that's not their intent. All right, so let me give you an update regarding pending home sales, new listings, and housing inventory. So pending home sales are when a home seller accepts an offer from a home buyer, and this can include both contingent and pending contracts, as the case is in the Raleigh market. As you can see, pending home sales were down 10% year over year on the national level, and that's the largest decline since May of 2020. And that was coincidentally when the government issued the stay-at-home orders for the pandemic we were in. Also, new listing of homes for sale were down 2% from a year earlier, and active listing, the number of homes listed for sale at any point during the period, fell 5% year over year, which was the smallest decline since December of 2019. So our housing supply, which is comprised of all the active listings, represents the total number of houses listed for sale at any one point in time. And for the 4 weeks ending June 19th, active listings fell 5% year over year, which is the smallest decline since December of 2019. So here's a great graph that illustrates that point and shows pending home sales, the red line for 2022, being down almost 10%. And really ever since April, when the average mortgage rate hit 5%, we've begun to see a decrease in pending home sales. It's now showing up in June because the buyers in April and May were protected and had their interest rates locked. So this increase in mortgage rates should bring a little normalcy to our markets, I think, and reduce that rampant speculation that occurred as rates were ridiculously low from a historical perspective. And you can see in Raleigh, North Carolina, pending home sales are down a little less than the national average at 8.45%, but still down on a year-over-year basis. On the national level, we can see the number of new listings has declined 2.2% on a year-over-year basis, and starting to really catch up with 2021. But we can compare this to Raleigh, where the number of new listings is actually up 18.8%. So inventory levels are growing much more greatly in Raleigh, North Carolina than on the national level. Now, for those who think the bottom's going to fall out of the housing market, I think the only way we see a sizable drop is when we see a large increase in the number of new listings. And as we can see here, active listings of homes for sale on the national level are down 4.7% on a year-over-year basis. And in Raleigh, North Carolina, active listings are down almost 8.5%, which is almost double the national market. And in this graph, we can see that 48% of pending sales went under contract within 2 weeks on the national level. So 50% of the houses closed in 2 weeks or less, and the other half 2 weeks or longer. While in Raleigh, North Carolina, almost 45% of the properties sold in 2 weeks or less, which is up almost 7% on a year-over-year basis. And on this graph, we can see 34% of pending sales went under contract within 1 week on the national level. Now, I don't have that stat for you in the Raleigh market, but this is a really good one. This one, let's call this a forward-looking indicator. And we're looking at the red line at the top, and you can see it's been trending down heavily. And, we can see that, of course, 34% or 3 out of every 10 homes went under contract in a week or less. Now, that stat is included in the 2-week pending sales, so they are included in that, but they are trending down. So this indicator really gives you a good indication of the market's appetite, how fast it's moving. Is it slowing down? Is it speeding up? And in this case, we can definitely see it's slowing down. And digging a little deeper, looking at days on market, which again is the average number of days a house is listed on the market before going contingent or pending. So we can see here the average days on market for the national level is 17 days. Whereas in the Raleigh market, we can see the average days on market is 21.8%, I believe, which is down 10.4% on a year-over-year basis. And I will point out that that's still selling really fast. So that's really, really good. I mean, when you go back to 2020 levels, I mean, homes are selling in around 40 days. So homes selling in an average of 22 days, that's pretty fast. But I do expect that to continue to slow. And I think days on market is a trend that you really want to keep an eye on, because this trend has been increasing, and you should expect to see houses are now selling a little bit slower compared to last month. All right, moving on, we can see on the national level, 55% of homes sold above their list price. And as you can see with the red line, that trend is starting to turn down a little bit. But interestingly enough, we saw this trend turn down much later in 2021. But I want to reiterate that this trend is really a lagging indicator, because homes go under contract 6 to 8 weeks it takes to close. Sometimes they close in 4 weeks, but I'm just saying we don't really know what the closing price is going to be until it actually closes. So it is a lagging indicator, but it just confirms that the gap is narrowing between the price over and the actual list price. Okay, for Raleigh, and sorry, this isn't an apples-to-apples comparison, but I think I can get the point through with this graph. The average sale to list price is 107.3, or 7.3% over the list price, which is, I believe, a 3.2% year-over-year gain. A little bit smaller than the national average, but if you look, you can see that sale to list price is starting to decline. A little bit less than the national average, but definitely in a decline. Now I want you to really pay close attention to this next indicator, because this is a leading or forward-looking indicator that you can use to really gauge the strength of the market. And that's the number of listings that had a price reduction or a price drop. And here we can see on the national level, 6% of listings had price drops. And that's represented by the red line. That's 2022. And that is a straight up line. And that pretty much coincides exactly with the rate increases when the party was over. So if you want to have your finger on the pulse of the market, then you just need to watch this indicator. Whereas in Raleigh, North Carolina, again, sorry, not an apples to apples comparison, but I think we can clearly see this black line right here. This is the increase in price reductions or price drops, and that number is greatly increasing. So 17% of the homes in Raleigh, North Carolina had a price drop, and that's a 9% increase. And I think this is significant because Redfin, who's only been monitoring this data since 2015, is saying that right now we've got more price drops than at any time since at least 2015. That's significant. Right now, 6.1% of listings have a price drop. And as you can see, this was the end of 2019, before the pandemic hit. 5.3% had a price drop. We thought interest rates were going to creep up, and this line is just straight up. So this is somewhat of alarming how fast this is, but at the same time, I just don't think it's sustainable that rates just go vertically. I think it's always important to keep in mind that homes are still selling at record levels. In fact, they're selling for an average of 2.4% over their original list price. Now, that red line, 2022, is trending down, and a very important one to keep an eye on. But again, this is going to be a lagging indicator because you're not going to really know until the home closes. So this could lag 6 to 8 weeks behind the actual sale. But this will be a confirmational trend that will really kind of confirm whether we've bottomed or we've topped. And in Raleigh, North Carolina, homes on average are selling for just under 5% over the list price, but the black line is 2022, and you can see that is trending down noticeably. So a lot of the speculation has been taken out of the Raleigh market. And the last indicator I want to show you is the Redfin Home Buying Demand Index, which gives us a unique insight into home buyer demand because it represents the number of home tours and other home buying services from Redfin agents. And Redfin basically tracks the number of showings their agents go on, which gives us an easy to follow metric to track demand. So starting in April, we can see with the red line, this trend has really started to decrease and is pretty much falling off of a cliff. So huge decreases in home showings and thus home buyer demand. And this would be a forward indicator, great indicator, gives you a great glimpse into the buyer's psyche, and they are showing up fewer and fewer. So I think this would really be an indicator that would signal that we are going to see some price softness for sure. But home buying index is down 16% on a year-over-year basis. That's a pretty steep drop. Please leave me a comment below and let me know what your biggest takeaways were from today's video. And if you got any value from the video, please give it a like, and I'll see you on the next one.